So as of November of 2025, the median home price of a home here in the US has increased to $415,000. So if that's the case, right, we as veterans and active duty military need to know exactly how much income we need to make in order to qualify for this type of home. And that's exactly what I'm going to teach you today. Good to go. My name is Jimmy V. I'm a Marine vet, MLO, specializing in VA loans. Let's get into it. Okay. So the first thing that we got to take a look at, right, is the monthly payment on a $500,000 home. Good to go. Now keep in mind that mortgage rates are going to trade or change on a daily basis depending upon what's going on in the economy. And obviously credit scores play a huge factor in this as well, right? The better the credit, the more competitive the financing terms that you will receive. In addition to that, what's happening with inflation as well. So rates are going to change daily. I'm going to give you a hypothetical rate, but if you want a customized rate quote, I'll make a link in the description. You can reach out to me. But let's just assume 500K, right? Hypothetical rate, 5.75%. That would put your monthly payment at or around $2,900 a month, okay? Now, keep in mind, VA loans, right? You're saving money compared to FHA and conventional. Why is that? Well, because you have no PMI, private mortgage insurance, which means that you are not going to pay unnecessary fees and expenses on a VA loan, right? In addition to that, the interest rate is also going to be more competitive compared to a conventional loan, anywhere from 3/8 to 3/4 of a percentage point. So yes, I have a biased opinion, but I truly believe in the power of a VA loan saving you money. So if we take a look at a VA loan, you add in, right, taxes and insurance. Let's just estimate that on a $500,000 home, your total all-in monthly payment would be at or around $3,200. Oh, really quick, one more value add, okay? If you are a 100% service-connected veteran, depending upon the tax municipality that you're in, you may be able to get your property taxes waived. Good to go, but you're always going to be required to pay for homeowners insurance. Now, there's one other thing that I want you to know about VA. Well, actually, there's a lot of things that I want you to know about VA loans, but in this particular scenario, I want you to know how VA loans work, okay? So VA loans don't require a specific debt to income ratio in order to qualify. VA loans go off of something called residual income, which is the net amount of money that you have left over. However, if you and I were sitting here just chatting, I would say you need to make a decision on what your debt to income ratio needs to look at. In other words, how much of your income should go towards your mortgage payment. You tracking with me on that? And here's what I would tell my veterans and active duty military. I think a good general DTI to stick at or around is 41%. Now, it doesn't mean that you can't go higher. Okay, if you want to go higher, you can, right? But I would say good general rule of thumb, 41%. Obviously, you can go lower than that too. So why is this important? Because 41% of your monthly income is going towards your mortgage payment, right? Leaving the other 59% going towards things like, liabilities, right? Taxes, etc. So I don't want my veterans to get overextended here, okay? Because there's going to be a lot of mortgage lenders that will say, hey, you qualify for X, right? Meaning you can go up to this amount. You're like, well, wait a second, that's maybe a little too much for me. I don't know if I want to spend that much money. What I tell my veterans is you want to custom fit the mortgage to your individual needs. You don't want the house to own you. Good to go? So I like the 41-59 approach. Now, what we need to kind of figure out from here is just do some basic math. This isn't like super detailed VA guidelines. It's just division, right? So if we take that monthly payment of $3,200, right, and we divide it by 0.41, that equates to at or around $7,800 a month. There we go. $7,800. So what I would tell my veteran and veterans family is that we would want to have at or around an estimated $7,800 a month to qualify for a roughly $500,000 home. Now, this is kind of just a general idea of how this works. That translates to roughly $94,000 $1,000 a year. By the way, if you guys are enjoying this video and you feel like I've earned it so far, would you consider showing your love, clicking like on the video? And in addition to that, if you want to learn more about VA loans, consider subscribing to the channel so that way you and I together can lock arms and educate more veterans and active duty military. But I feel like this is a good general framework that you can kind of use moving forward into the future. You take the estimated mortgage payment, right? Using a hypothetical interest rate. From there, you want to keep your mortgage payment at or around 41% of your income. You simply take that mortgage payment, divide it by 41. That tells you where you need to be at. Now, can you qualify for more? Possibly. Is there a possibility you may qualify for less? Yeah, there's that case too, all right? But nevertheless, I think that this is a good framework that you can use moving forward. I'm Jimmy V. If you have questions, make sure to comment down below so that way we can make sure to get them answered for you. Thanks for watching. We'll talk to you soon.